Hey guys, welcome back to my YouTube channel, and in today's video I want to talk to you guys about how you can become a tax-free millionaire by investing in a Roth IRA. If you guys are new to the channel, my name's Tamarcus. I'm a CPA and tax preparer who provides business and investing tips to those who want to become financially independent. By the end of this video, if you're interested in opening a Roth IRA, please see my referral links in the description below for Charles Schwab. Also, stick around to the end of the video and I'll give you guys a deep dive into what's in my Roth IRA. Like always, if you go on to like this video, please hit that subscribe and like button for me. It really helps the channel. And with that being said, let's get into the video. So you guys are probably thinking, Tamarcus, what exactly is a Roth IRA? Well, a Roth IRA is kind of like a traditional IRA, but it has some key differences. The first key difference is how much you can contribute to each IRA. In a Roth, if you're under the age of 50, you can contribute $6,000 a year. But once you turn 50, you can contribute up to $7,000 a year. On the other hand, in a traditional IRA, you can contribute up to $19,500 a year. And when you become 50 or more, you can contribute $26,000 a year. So you may be thinking, well, why would I want to open a Roth when I can contribute more to the traditional? The key difference is how that they are taxed. Contributions to a Roth IRA are made with after-tax dollars. You may be thinking, okay, so what's the after-tax dollars? After-tax dollars is any earned income that you made that has already been hit with income tax. So say, for example, you're a W-2 employee. The net income you get with your paycheck, that would be considered earned income after tax dollars, and you can use that to invest in a Roth IRA. So once you invest in the Roth IRA and decide on what you want to invest in, the money will start to grow. You'll start to get capital gains, and when you're ready to take that money out, it's tax-free. Unlike a traditional IRA that you get taxed when you take the money out at whatever tax bracket you're in at the time. Now, I do want to make you guys aware that if you touch the capital gains in your Roth IRA before you turn 59 and a half years old, you will be hit with a penalty and have to pay taxes on those capital gains. Also, if your Roth IRA account is not over 5 years old and you take money out, you will also be hit with a penalty and have to pay tax on the gains. However, though, you can withdraw contributions tax and penalty free. So say, for example, you've contributed up to $6,000 in your Roth IRA and it's grown to be like $6,700. And then somewhere down the line, you're like, oh man, I need to buy a new car. And you take out $6,000 to buy the new car. You will not be taxed or penalized on that amount if you're not 59 and a half years old or if the account isn't 5 years old. However, if you take out the whole $6,700, you will have to pay tax and penalties on that $700. Another thing that I really need to make you guys aware of is that if you're a high income earner, you may not be able to contribute to a Roth IRA. If your filing tax status is head of household, single, and I believe married but filing single, if you make between $125,000 and $140,000, the contribution you can make to a Roth IRA is reduced. And also, if you make over $140,000 and you fit those filing statuses, you can't contribute to a Roth IRA. And also for married couples, if you make between $198,000 and $208,000, the amount you can contribute to a Roth IRA is reduced. And if you make over $208,000, you can't contribute to a Roth IRA. All right, guys. So you know I'm an accountant, and one thing that I love to do is crunch numbers. So what I want to do is go in and show you guys how much money you can potentially have when you're ready to retire at 59 and a half years old if you invest in a Roth IRA. Like I said, some of the key measures I have is for myself personally. So some of the things you may want to change to fit your age requirements when you become 59 and a half years old. But currently right now, I'm on calculator.net. And if we go into let's go into investment calculator. And so say, for example, the starting amount we'll have in our Roth IRA is $0, of course. And in 33 years, I will be 59 and a half years old. So I'm going to plug that amount in for me. Now for the return rate, I'm going to plug in 8%. And this is simply because my Roth IRA consists of mostly index funds that track the S&P 500. And historically, over a 30-year time frame, the S&P 500 has returned 10%. So I'm going to be conservative and put 8%, but I will show you guys how much it should be if I invest in this. There's a 10% rate of return. So I'm going to contribute up to $6,000 at the beginning of each year. And I'm going to contribute this yearly. So if we hit calculate, we can see over 33 years at a return rate of 8% and a contribution of $6,000 yearly. When I'm ready to retire at 59 and a half years old, this account, my Roth IRA, would have $945,760.02. And that's with only a total contributions of $198,000. And the rest comes from compound interest. Now, also, if we scroll down here, there's a monthly chart, a monthly and annual chart that we can see. And if we look down here at about year 9, the compound interest that I have after year 9 will exceed the amount of my contributions. And then you can see, when it's time for me to retire on 33 years, I'd have $70,000 worth of compound interest. Now that's not bad considering, that's a great way to start building generational wealth. If you have a Roth IRA and you pass, this gets, or you don't spend all the money, you can make your kids beneficiaries as well. So that's another thing that you guys can do. But then let's plug in 10% and let's see how much money I would have. So if the S&P 500 keeps tracking at 10% over 30 years, I would have $1,466,860.19 when I'm ready to retire, and only $198,000 of that is from me contributing to a Roth IRA. So the last thing I want to show you guys, as promised, is what's inside my Roth IRA. Now I want to go over my Roth IRA, let you guys know what I'm doing and some kind of the key mistakes or some of the decisions I decided to change when I was in my Roth IRA. So for the most part, myself, what I believe as an investor for a Roth IRA or for some type of retirement account like this, you want to have something, you want to invest in index funds or ETFs or things like that. When I started this Roth IRA, I was thinking about, doing some day trading since the capital gains would be tax-free when I decided to take the money out, or invest in, some stocks that I believe that were going to take off. And as you can see right now, I had holdings in ChargePoint, Fuel Cell Energy, Genius Brand, and Prospect Capital. Now, and I decided I was going to stop doing that and just kind of, invest in index funds and different things like that. Now, I will say, though, honestly, the Prospect Capital was a mistake because I also have an individual brokerage account with Charles Schwab. And sometimes when you click on to invest, it'll automatically put my investments onto my Roth IRA, and I have bought these shares accidentally. But this is a dividend stock, so I'm kind of okay with that being in my Roth. But as far as ChargePoint goes, I'm going to wait until this takes off from the ETF infrastructure bill, and I'll probably sell this off. And then I'm kind of waiting for Fuel Cell and Genius Brands to probably hit break even, and I'll sell those too. And then if we scroll down here, we can see that I'm invested in the Charles Schwab S&P 500 Index Fund, which is SWPPX. And then I'm also invested in the Total Stock Market Fund that they have, which is ticker symbol SWTSX. And for the time being, I think these are going to be most of what I'll be investing in. Like I said, the S&P 500 over 30 years, the rate of return is 10%. But then also with the Total Stock Market Index Fund, it allows me for not to just have the best 500 companies in the S&P 500, but it gives me a little bits and pieces as a whole total stock market. One thing that I debated about is that I was also in a Charles Schwab bond fund, index fund, but I decided to get out of that because I'm fairly young, and I feel like, if the stock market does have its ups and downs based off my age, it will recover in time enough for me to get those returns that I'm looking for. And for a bond fund, the returns are kind of like slow pace. And I decided to sell it, and this is basically what I had left over. And So for me, I'm going to invest in the S&P 500 index fund and the total stock market index fund. And I do want you guys to see something importantly, that I've only had my Roth IRA account for like, I'd say like 7 or 8 months, and it's already up $1,619.66. And I'm recording this while the stock market is still open. So I think that's pretty good. And like I said, I invested the $6,000 for 2020, 2021. And one key thing that I did want to let you guys know, that you can play catch up with your Roth IRA account if you don't contribute the whole $6,000 in 1 year. So say for example, 2020, I didn't invest anything into a Roth IRA, and I kind of didn't start looking into it till around 2021. Well, the IRS, they allow you to contribute up to the previous year's contribution, the contribution year, up until the tax deadline. So since I didn't contribute anything in 2020, in 2021, the tax deadline, say for example, was like April 15th, 2021. I had until that time frame to contribute into my 2020 year. And then anything I want to contribute after that would have to go to 2021. So I think that's kind of a cool thing that the IRS put in place for people who want to contribute into a Roth IRA. And I can say, you know, I'm pretty happy with the gains that I have inside of here. A little bit over $1,600 in a couple months. And I'm going to continue to contribute $6,000 every year at the beginning of the year. I think that's pretty good. Well, thanks everybody for tuning into the video, and I hope you guys learned about why you should open a Roth IRA, how it can make you a tax-free millionaire, but most importantly, how you can start to build generational wealth for you and your family. Like always, if you like this video, please hit the subscribe and like button. And also, if you're looking for a tax preparer, please see my website in the link below so you can find out what type of services I provide. Thanks everybody, and I'll see everybody on the next one.